When you're looking for the best stocks to buy, double bottom bases can launch some serious gains and make you a winner with a capital W. And W not only stands for win, but it's also the shape of the double bottom base and how the pattern gets its name. Like the cup with handle base, the double bottom is one of the most powerful and profitable chart patterns. While the shapes are different, the basic concepts behind the two patterns are essentially the same. For the double bottom, you first have a prior uptrend of around 30% or more. The stock then hits resistance and pulls back to form the first leg down. It tries to rally for a while, but then hits resistance again and begins to form the second leg down. Now this is key. The peak in the middle of the W should be in the upper half of the base pattern. It should also be below the peak on the left side of the pattern. And the second leg must undercut or go lower than the first leg down. Just like the handle in the cup with handle, this is where we have that final shakeout to get rid of those weaker, less committed shareholders. And now that most of the sellers are out of the way, the stock starts to climb again. Like all chart patterns, the ideal buy point here is based on that most recent area of resistance plus 10 cents. That's the peak in the middle of the W for the double bottom. And like all bases, the appropriate buy range here extends 5% above that buy point. Make sure to keep in mind that a double bottom takes at least 7 weeks to form, and the total price percentage decline within the base should be less than 40%. Double bottoms get their shape because they tend to appear when the overall stock market is showing choppy roller coaster action. But despite that volatility, double bottoms can deliver some serious gains. Take Grubhub, for example. Back in late 2016, the food delivery service formed a 29-week-long double bottom. Here's the prior uptrend, the first leg down, and the second leg down. See how the second leg here undercuts the first. Take note of the buy point at $42.35, 10 cents above that peak in the middle of the W. And after reporting earnings, Grubhub bolted past the buy point in heavy volume. Here's a closer look at the breakout on a daily chart. Now, volume was a whopping 476% higher than normal, well above that 40% minimum spike you want to look for. Strong volume like that on a breakout is a very clear sign of strong institutional demand. Look how the relative strength line was also spiking higher, a sure signal of market leadership. What happened next? Well, Grubhub more than tripled in price over the next 15 months. And that's just one example of why you want to keep an eye out for stocks forming a double bottom, so you can turn that W into a win.